thank you, John. Thank you so much for taking the time to answer some questions for me. As we all know, or as some of our viewers might not know, you are the founder of the Downs Group with Vellum Mortgage, which is one of the largest companies in the DMV area. And like I was just saying a bit earlier, you're very, very knowledgeable about what's going on in the market. So with what you were just kind of opening with, I'd love to start with some questions that kind of fall under these government layoffs, the tariffs that are going on. So let's start with the big picture, if you don't mind. How would you describe the current state of the US economy, and what are the top 2 to 3 factors influencing the mortgage industry right now?
Yeah, so that's such a loaded question. When you think of the economy as a whole, right, that's the country. And then you think of where we live, or where I live, like sort of DC metro area, and the people that we serve. It can be wildly different as you go either from state to state or region to region. And I think for the most part, I think what's so interesting right now is that nothing has really changed economically. I think if you go back about 6 months ago, things were different as far as how we saw things, right? How stable we felt, how secure we felt, how we lived in a world where we kind of knew what the rules were and we knew where we were going, and it was comfortable. And when you're comfortable and you're confident and your stock portfolio is performing well, you live freely, you spend money. And then you hit sort of the period that we're in right now, which is a combination of being unsure, maybe a little worried. And if you're not worried for yourself, you might be worried for a friend, or you might be just worried for your local market. When you hear of big government job layoffs, and then you think like, well, I live in maybe one of the epicenters of government jobs. So, well, that can't be good, can it? And then you see the stock market just absolutely unraveling. It's almost like a COVID feel to it. Meaning like
Yeah.
it's a heavy, uncertain time. But what's weird about right now is like nothing's really different. So,
Yeah.
even some of the people that I've witnessed have job loss, many of them have found new jobs for more money, and they had competing offers from people, from employers. So
Wow.
there's this feeling where I feel like the headlines are really dark and the uncertainty is really high, but the real world is still the same, and that's what
Mhm.
I find most fascinating about where we are right now.
Yeah. Yeah, no, I totally agree. It's a really unique balance. And what you were saying about people getting other jobs and even at higher pay, it's so interesting to me because, like, when I was a lender, it was many years ago, but people would ask me questions all the time. Do I need to stay in the same job forever in order to get a mortgage? And I would tell them no. I mean, but if you're looking to buy a home or refinance somewhat soon, then you need to at least stay in the same line of work. So would you give people that same
So it's
advice
changed
now?
a little in that employment is employment, and guaranteed employment with salaries, regardless of industry, is fine. So for instance,
Hmm.
there's even a rule, it's called projected income. So you could essentially quit your job today. You can line up another job that maybe starts in 3 months. But if that job offer letter is guaranteed, there are no conditions of whatever that job offer is, like a security clearance or drug testing or, a certification or something, then lenders can actually use that as income, and you can close on a home even without starting your job for many months. Like
Wow.
it's that part has gotten a lot easier. So the
Yeah,
job feeling like, oh boy, I need to keep this job in order to buy a house. I think the more important thing is worrying about, are you going to make money to pay the mortgage, right? Whether it's that job or a new one, no one's really going to buy a
right.
house when they are unsure of future earnings. And that's probably the bigger
Totally.
worry in the moment right now, is that.
Yeah, no, that makes a lot of sense. So, in your opinion, how has the implementation of Doge and the subsequent government employee layoffs impacted the real estate
Mhm.
landscape, and particularly in our DMV area?
So it's interesting to unpack, because if you read headlines, well, one, you just read headlines, right? some department, fill in the blank, laying off, 5,000 people, 10,000 people. Like you'd heard these really big numbers. But when you started looking at, jobless claims, when they would come out, we would see that, wow, the jobless claims didn't really go up. And while we heard about a lot of layoffs, we didn't really see a lot of layoffs. So for instance, I think I personally wound up getting to about 16 people who were planning on buying a house in the early part of 2025, who then said, I'm no longer looking to purchase. And half of those people actually lost their jobs. Of those people, half of them had their contracts reinstated. So same employer, same government, whatever, right? Whether it's a contracting firm or something.
Wow.
And then the other people wound up finding jobs. So none of those people were really impacted. Now, the other half, I said, right, the half that still had their job, they were pulling back because of worry. And some of that was worry about their personal job, and some was worry about the local market. So if everyone loses their jobs and everyone starts listing their houses, well, then housing prices might suffer. And if I feel like housing prices might suffer, why do I want to buy right now if I think the price will be lower? I'm just going to stay where I'm at, right? So we had a mix of all of that. So then when you kind of fast forward to reality, I think people are kind of waking up seeing that things aren't very different yet. And it's still more worry, more, what do they say? More something than bite. I don't know what that analogy is, but bark than bite. Is that what it is? Um,
Yes,
yeah.
bark then
So
bite.
I don't think but now it's transitioned, right? It was that was the worry. The worry was jobs. Now the other worry is just markets and wealth. And, when you see stocks crashing, and a lot of, especially younger people, first-time home buyers, they're very heavily invested in tech, right? Think of, Palantir or Amazon or, Facebook. Like a lot of those stocks went bananas over the last year and a half, and people felt a little rich. And when your assets are growing, you're going to spend and you're going to do stuff. And a lot of those companies have just gotten waxed to like 10, 20, 30, 40%. Tesla almost cut in half from the high, just post the election as an example. So if all of a sudden now it went from, hey, I'm worried about Doge, I'm worried about government cutbacks, and then we went through a period where it's like, oh, maybe it's not as bad as we think, and they're going to fight it in court, and some of these people are keeping their jobs, and I don't really know that many people that are impacted. Well, now all of a sudden you get your financial statements and you're like, crap, I lost 30% last month. So it's a big ball of evolving worry. But to answer your question and what it's done to housing, it hasn't slowed it down. That's interesting. I think in our local market, for the longest time, we would have maybe 4 to 6 people bidding per house. And if you feel like maybe 20% of those buyers are pulled out of the market because of what I said before, well, we're still having an imbalance of more buyers than sellers. So, and then you've had interest rates pushing lower. It was a little bit of a surprise because of all the uncertainty. That those low rates would actually pull in some people that maybe originally weren't in. So maybe that's sort of the offset of job layoffs or job announcements or job worries. One thing I have been noticing, I actually did a report today. I'll probably put it out in social soon. I took listings specifically in DC, and I took listings within the last 2 weeks, and I went and tried finding how many of those properties had out of off-site addresses, which is sort of a marking for that property being an investment property. And it was like 30%. So if you think of pandemic era, the city was awesome. So from the 2010s, like the city is where you wanted to be. DC was nuts. And that's where all the crazy competition was. And I remember in, let's say 2015, 16, 17, when Montgomery County, Northern Virginia started getting a little hot, a lot of DC agents that had already been used to all the heightened competition and how to write strong offers, they started winning in Montgomery County, Northern Virginia. And people would be like, how do you keep winning all these competitive offers? And they were like, oh, it's easy. I just write DC contracts. Like we've been doing it here for years. Well, then when the pandemic happened, it pushed everyone into the burbs. So then the burbs has been nuts for the last 3-4 years, right? And that's why properties went bananas.
I agree.
Well, if you refinanced your low rate property in DC, it actually made a lot of sense to keep that as a rental. So now when you bring in a little bit of uncertainty into a local economy, sometimes what happens is these people start listing their investment properties. So I believe you'll see an uptick of inventory, probably a little bit more in the DC market than in the suburbs. I think we're going to see a little bit more balance. So a little bit more negotiations, buyers not having to give away their first and second born to win, likely not competing against as many people, sellers paying commissions. That was a worry for a bit. I'm not seeing that
Yep.
as a problem.
Yep. It'll be interesting to see. Like, are people going to sell? Are they going to put them on the market, or are they going to keep them as an investment, especially if they bought the place in COVID at a 2.5, 3, 3.25%
Mhm.
interest rate?
Yeah, I mean, there is a tax
Um,
advantage for if you live in a house 2 out of 5 years, you can sell it, and there's a capital gains forgiveness. So a single person, it's
yep.
250, married, it's 500. And we're kind of right at that 3-year point too, right? Keeping your
Mhm.
place. So 2021, 2, 3, like all the house hack bros were all over social media. And it's like, you're an idiot if you don't own 10 houses and live off cash flow. And that's the secret to getting rich, right? Um, so that's what
Yeah.
everyone did. And I think once people really get a taste of it, it's not for a lot of people. Like I was a lousy landlord. I was the worst
No.
landlord in the world. Like of anyone that believes in owning a lot of houses, I can't because my wife wants nothing to do with it and I'm too busy to manage it. Like if someone called like, "Oh, my light bulb's out." I'm like, "Okay." Like a week later I might drop by and give you a light bulb.
Yeah.
So
It's so much
it's
work.
so like it's not, but it could be. And I think for some
Yeah.
people, I had some properties that sat vacant for 3 months, but it was shame on me because I was too busy just putting ads in papers or calling people back or running credit reports. I was just too busy. So life for me was too hard. So I think a lot of people are getting a taste of that. Um, I
Yeah.
think you also think about tenant laws, and then you think of a job loss event mixed with tenant laws that favor tenants. I don't know if I would want to be a landlord in DC right now. I don't know if someone lost their job and then squatted for 6 months to a year and I couldn't kick them out. I don't
Ooh,
know.
very, very
Yeah.
good point.
So
Very,
maybe
very good
that's
point.
why some of these
Wow.
people are starting to offload their properties and we are seeing an uptick in investor sellers.
Yeah, that makes a lot of sense. How has inflation impacted mortgage applications and buyer qualifications this year?
So, it's funny. I could say that it helped and then I could say that it hurt. Have you ever heard of that phrase, a K-shaped economy? So it's the idea, right? So if like you draw a straight line, let's call that ground zero, and then you have one line that goes up like a K, right? Let's call that the rich, the people that
Mm-hmm.
have really good jobs, high educations. In our local market, it might just be the classic DC attorney. Their lives have gone really well. Like they've gotten big raises. Government workers have had massive raises. Everyone got massive raises in the DC area. So inflation works with income. And then if you think of those people, if we're all buying the same eggs and we're all feeding the same number of mouths in our household, well, those people can stomach inflation a lot easier, right? So even rising interest rates just doesn't hurt them as much because if each of them now make, two people in a house and each make 50 grand more per year, it's $8,000 a month after taxes is 5 grand. They can kind of absorb a lot of stuff with that extra 5 grand they have to spend today that they didn't have in 2021. The other part of the K shape is the first time home buyer. It's the quote unquote regular person, below median income. That person's gotten crushed and it's been hard for them. It's harder for them to save money. It's harder for them to stomach these higher interest rates. And I think that's why you've seen the DC condo market struggle for the last few years because that's the classic
Yeah.
buyer of those products. And I think if there's a twisted bright side, maybe it's bad to say twisted bright side. The new administration,
No.
what they're targeting and some of the things that they've said recently, what it feels like to me is they kind of are cool with bringing a sledgehammer to the top side of that K, uh, and simultaneously bringing it back up on the bottom. Almost coming out with policy where it's like, rich people have done pretty well the last few years, so we don't really care about you right now. We care about those other people for a little bit. So you rich people, your stocks
Yeah.
are going to get crushed. I don't care. And but energy costs are going to go down, and housing is going to get a little cheaper, and rates are going to go down. And those people who haven't been able to enjoy your richness, they might actually have a chance. Like, I think that's a theme developing. So I'm curious to just keep an eye on that. And I know that sounds aggressive, right? What I just said, but
No,
it
no.
feels like with the rhetoric, from Bessent, the Treasury Secretary, from things the president have said, it just feels like that's the plan. Now, whether they go through with it or not, right? That's
Yeah.
a different story.
I'm still avoiding looking at my 401k statements.
Yeah,
I'm
it's
scared.
so everything's changed in markets and just how they move, and algorithms and computers, and they have options and same day expiration options. There's so many. I mean, the stock market really is now a big gambling center, and I think for regular people, the reason why they say just set it and forget it with a lot of your investments, be smart with it every year, have someone manage it. A lot of advisors that I partner with, the beginning of the year pivoted. They started raising a little bit more gold. They went a little heavier in cash. They got out of the indices and they started looking at more specific stocks and companies, because the indices were very tilted towards big Mag 7 stocks, right? Like the big, huge tech companies that just got waxed. So it's like I almost advise not looking at it, for 6 months. And then maybe at the end of the
Yeah,
year, you'll be like, yeah, this looks great.
exactly. I would rather be pleasantly surprised than potentially
Yeah.
depress myself
Yep.
every day.
Yep. 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 For sure.
Well, if you don't mind, let's rewind and take things back to the basics for a second. So, interest rates. This term gets thrown around our industry all the time, but can you break down exactly what it means and why it matters to most home
Yeah.
buyers?
So if everything we do in life is a product of a payment, right? So it's like everything we do, if I want to buy a car, it's like, oh, how much does it cost me per month? You have a job, you make a certain amount of money, a certain amount hits your direct deposit in your bank account every month, and that's what you have to live off of. So when you think of buying a property, there's the interest rate of the market, and then there's the cost of the property you want to buy. And you put those two things together, you get your mortgage payment, right? Obviously, there's a down payment and your personal credit score and all that stuff. But the higher interest rates go, the higher the mortgage payments go, the harder it is for regular people to afford that property. So interest rates are directly tied to affordability. And one of the struggles and surprises, so rates went up from, let's say, 3-ish% from 2019, like almost the better part of the second half of 19, all of 20, all of 21, and then early 22 in February, I think it was, we went from 3 to 5.5, and we haven't looked back since. And a lot of people thought that real estate would unravel and fall apart, because if rates doubled that fast and mortgage payments just shot up 30%, right? A $3,000 mortgage is now being $4,000. That's a huge jump, that housing would unravel. And the reason it didn't is because of inflation with income that we mentioned, right? A lot of people got raises. Those raises helped offset the difference. A lot of people didn't move because they had low interest rates. So there were fewer houses to buy, and yes, fewer buyers, but the dynamics and the math work, supply demand. So the lower interest rates go, that will usually bring in more buyers. The more buyers you have, the hotter real estate gets and the higher prices go, right? So it's all kind of directly
Yeah.
connected.
Yeah, no, I love it. That's very true. So for prospective buyers out there who are government employees experiencing uncertainty with their job stability, what advice would you give them if they were unfortunately let go or they decided to leave their job? And can they leave their current job for a new one and still qualify
Mm-hmm.
for a loan?
Yeah. So I think everyone, whenever we qualify people, we talk a lot about forecasting life and backing into now. Forecasting life has lots of things, right? Are you going to have a kid? Kids are $2,500 a month on average per month of an expense, right? Just childcare. Are you going to change a job? Is that income going to go up or down? What about bonuses or promotions? How should you factor all those things into what you buy today? So I don't think it's any different than that.
Mhm.
I think there are some people who they want to buy something, or they think they want to buy something, and they're stuck in their head. They're like on a hamster wheel of thought. And I think just talking to someone like us can help frame everything out. And sometimes when you look at
Yeah.
everything, you're like, it is too much risk for me to buy a house right now. I probably shouldn't. I'm just going to rent. Let's see where this thing goes. And a year from now, I'll figure it out. And that's okay. That's totally cool. And that's actually what some people should do in the situation that you mentioned. I have others that are just proactively saying, I'm going to start looking for a new job now. Just why wait if it's already, and people in regular employment situations, that's what they do. If they think like, oh my God, my boss just came in and said that, we can't have coffee anymore and we have to bring in our own utensils and we have no more plastic cups because we're cutting costs because it's really hard right now. A lot of those people in that moment would be like, man, maybe I should find another job. And,
Yeah.
so
Yeah.
I think it all goes into a plan, and it just needs to be talked about. And everyone is so different that it's just having conversations with someone who is going to be comfortable telling you it's okay to not do something right now. And I think it's hard in our
Yeah.
industry because our industry, I hate it. It's a sales industry more than anything. And everyone, a lot of real estate agents and a lot of loan officers, they are designed and programmed, not all of them, to convert you as a lead to buy a house. So all of the
Yeah.
information you get is generally, yeah, let's do it. You can. Who cares? You'll be fine. you know, and while
Yeah.
that's all cool, I think it's still good to talk about the other side, which is, all right, now let's model out that you lost your job. Now let's model out you lost your job and you can't find a new one for 6 months. Now let's model that you lost your job, you couldn't find one for 6 months, and the new job you find is for 30 grand less a year. Right. And if you model those things out and you have solutions, then go buy your place. If it's, oh my God, if
Yeah.
I just lost my job in 1 month and I'm out and I'm done and I have no family to help me, I have no spouse or partner or nothing, that person should probably rent. But I think people having
Yeah.
those conversations would be really good.
I completely agree. And I mean, you made a really good point about at the end of the day, real estate agents, lenders, we fall into this sales role because at the end of the day, sure it is. But I mean, as I've never been a real estate agent, but I've been a lender. And I mean, something that I think that sets apart the good salesy agents and lenders apart are the ones who aren't trying to sell someone right now. There's someone who is trying to be your
Mhm.
resource and your guide, and someone that's going to be in your corner if you tell them, listen, I can't afford this right now, but I want you to empower me to do everything I need to do right now to get me to that point, and they trust that that person can do that for them. I think that that's the mark, one of the marks of a great agent, a great lender, someone who's not trying to lock you in right now that's not the best for your
Mhm.
situation, but someone who's really guiding you through that process and that
Yeah, and
timeline.
some people are just built that way as humans, right? They're just good-hearted people. They just want to help people. They don't look at the business as like a financial motivation or like look at you as a dollar sign. Um, but I think when markets get tough, I do think you have to, as a buyer, you have to have your glasses on, thinking that is the advice that I'm given from these people, is it self-serving? And I
Yeah.
absolutely have had some agents call and be like, are you sure there's nothing this person can do? I haven't had a sale in 3 months. So like when you hear that, it's like, huh, do you really have the best interest in mind of that person? Now, I'm
Right.
fortunate that,
Right.
luckily, and for you too, like our market, I think our DC
Yes.
metro market, it really does breed really professional, awesome, top-notch realtors that are driven by their personal brands of doing the right thing and not being
Mm-hmm.
on some panel of a real estate whatever about how I convert more leads than the average person, right? Like I think we have more
Yeah.
genuine, good-hearted, smart people in our market. So I feel fortunate for that.